So how do you actually get rich from property? Well, this is the honest route that I took, and I'm going to share my story and what I learned along the way so that you can do it too. Making millions in property isn't easy. So if you've clicked on this video to find a fast way to get rich, this isn't for you. So I started my journey around 10 years ago. It's December the 23rd, 2014, when my first package deal went through to an investor. 10 years on, we're doing pretty well. We do 8 figures every single year, which I'm really proud of, and regularly hit £1 million months. So was it easy? No. Was it worthwhile? I'd say so. Fast forward to today, we do over £10 million a year across my property businesses, and we own well over 100 boring, vanilla buy-to-let properties. And I'm not saying that to impress you, but to impress upon you how anyone can follow on this journey. Why is it I picked property? It's not the easiest way of making money, is it? Well, there's a few reasons, I'll be honest. Number one, my background. So very blue collar background. Half my family are on benefits. Most of the other half use their hands to make money, laying bricks, doing electrics and everything in between. And so I was really in that world from quite a young age. And initially when I started to meet people that had become really successful, they'd either become successful because of property or they'd become successful in another field. And one of the first things they did is they invested it into property. And I liked stocks, shares, gold, etc. But I really loved 2 key things. Actually, I loved 3 things. Number one, I didn't need to be rich already to get into property. I needed some money to invest, but I didn't need to be rich. And the reason for that is because I could leverage debt. I could utilize mortgages to accelerate my wealth. Really hard to do in other asset classes. Number 2, it's a tangible asset. I can see it, smell it, and touch it. Right now, with everything that's going on in America, the stock markets are crumbling because of one person making one alteration. That typically doesn't really happen in tangible assets. And number 3, and this is the comparison against gold, it pays me every single month. So even if the value of the asset fluctuates every now and then, I'm still getting paid every single month. And in fact, it's an inverse investment. And what that means is when the value of a property goes down, it's because more renters are coming into the market, which increases my monthly rentals. So I really love it from all 3 angles. And honestly, I've explored it all over the years. I've done lease options, rent to rent, service accommodation, and it all comes back to me to boring vanilla buy-to-lets because I'm a boring bastard and I like keeping things simple because simple equals money. The reason I love this is I can accumulate wealth over time with very little input, and the input can be outsourced. And by the way, there's a proven history of rising house prices of almost 1,000 years since the Doomsday Book, all right? So then it becomes about location. Why is it that I ended up focusing on boring vanilla buy-to-lets in Yorkshire? And you might go, well, surely it's because you live there, Jamie. Well, no, that just makes my life a little bit easier, hence why I live in Yorkshire, not the other way around. So if you don't know this, my first few years in business, in property, I was just yes to any opportunity. Do the numbers make sense? I'll buy it. Do I do it there? Do I do it there? I own some properties in the northeast. I had a lease option portfolio in the northeast in a mining village. I had a couple of properties down in Cornwall because Cornwall is a great area to invest, right? I'm not knocking it, by the way. Then I had a couple of bits in Manchester. I had some... It was bloody awful. There was no strategy apart from, can it make me money? And it's just not the way to do it. So I started looking at the areas that made the most sense. And Yorkshire, for me, flagged something. And the reason it flagged to me is, number one, it's the 4th largest city in the UK. It's also the financial centre of the UK, outside of London. And so it's the 2nd largest financial centre. At the same time, it is in the top 4 cheapest regions to buy property. Now, let me explain what that means in a basic. It means that the household income, this is the outcome of that, the household income versus the property price in Yorkshire is one of the smallest disparities. So for example, it might be the average household income in my area is 45,000 as a household income, and yet the average purchase price in the same area is only 140 grand. That is a huge amount of affordability. Compare that to the other extreme. You go to central London, where the average household income will be a lot higher, but the purchase price, average purchase price versus that household income is maybe 12 to 15 times that. And so the affordability is a lot lower. And this is a really interesting dynamic, which Yorkshire is incredibly unique in the fact that the affordability for growth is so extreme. And that equals strong capital growth. So that's one of the biggest reasons. There's about 20 other reasons, but the big one is the opportunity for capital growth, which is where and which is going to make you a millionaire. So I'll give you an example. Between March 2024 and Feb 2025, the average property in Yorkshire was 231k, and across England and Wales it was 350. So whenever you're investing, you want to make sure that you are below the UK median. And as I said, it's in the top 4. Actually, as of that year, it was the second cheapest region for average house prices, making the investment point way easier, way more entry level compared to the other regions in the UK. And by the way, if we track these averages over time, you got 2021, it was 219k, then 227, then 229, then 229, then 231. And so we've got this real steady growth. But what's even more impressive is when you go below the boundary of that area. And this is really key as an investment philosophy. If my average in the area is 231, I want to invest in everything that is under that number. And the reason for that is everything moves towards the median. You need to get that in your head. If there's 231, everything is gravitating towards that. And the lower it is, to a certain degree, you don't want to go into like the 50, 60, 70 grand properties. The lower it is and the further away, weirdly, the faster the pull is upwards to that median figure. Likewise, when there's a contraction in the market or a recession in the market, everything that is above that number comes down a lot faster. So for example, in our areas where there's a contraction, £500,000 properties are really struggling, and yet £140,000 properties flying off the shelf, okay? So I'm focusing on terrace, semi-detached properties that are freehold, less hassle, less cost, full ownership. And my average purchase price is at that 130 to 140,000. And price is my main focus in there, but it has to be in a high value area. So ultimately, I want to be below this average house range for terrace and semi-detached properties. Properties that need a basic renovation. So I'm talking like might need a new kitchen, might need a new bathroom, bit of a tart-up, but no crazy renovations, no like movement of walls, etc. So if I could give a great example of this, it would be number 9 Ecclesbourne Road. So I ended up buying this property in 2020 for just over 119,000. Fast forward to today, the start of 2025, it has a recent valuation on it of £170,000. A Zoopla estimate says it's 171, but actual valuation, 170,000. That is a £50,000 increase in that, which is above the actual cash that I put in. So over a 5-year period, I have doubled my initial investment through my net wealth plus the cash flow. And that's just one property. So since growing my portfolio with properties like this one, I then started to value my time more appropriately. My value of my time goes up and up. So now all of my portfolio is now grown and managed by my company, Aspire Portfolio. And it's really weird. I own this full function end-to-end business where it helps investors like you, investors like me, to start up and scale up their property portfolio. So it's really changed there. So my business sources the opportunity, negotiates the deal in the best areas, gets it through legals with our brokers, our solicitors, our refurb team does all of the refurb, and we've got an in-house management team to manage the properties. And the reason I say it's strange is we are our business's biggest client. But our criteria is the exact same criteria that our investors just like you work to. And so this is really cool where we get to work with people just like me. And the reason I love it is I am the perfect customer, just usually to a higher level. And it keeps everything simple. So it keeps your initial investment strategy simple, boring, vanilla, buy-to-lets. You look at the areas to investing with a decent balance between capital growth over time, rental demand, and decent yield. And this is where Yorkshire, specifically West and South Yorkshire, is a really good shout. And you value your time appropriately. So you look at outsourcing your portfolio growth to experts, because if you've managed to save up 50, 60, 100,000, then the reality is you need to be using your time for something better. And when you can outsource everything for a small fee, it really makes a big difference. And for Aspire, the reason we're able to add so much value for such a small investment is that we get the long-term management in the end and build longer-term relationships. So whether it's with Aspire or someone else, make sure they've got everything in place to do that, because it's going to save your time and be way less likely to have costly mistakes. So you don't need to put in the hours learning how to get the best results. You can outsource that as well. So if that sounds like you, by the way, and you want to have a chat about me, my company, and how we can help you scale your portfolio, you need that minimum investment amount to take action on this. But if you put portfolio in the comments, I'm going to send you a link and you'll be able to book in your free one-to-one call, absolutely free, where we'll map out where you're at and where you want to get to. And if we can help you get there by helping you build that portfolio, then that's amazing. But worst case scenario, you've got a bit of an action plan to go away with. So put portfolio in the comments and book in your call. I look forward to having a chat. So I just want to reiterate, growing wealth is a journey, no matter what investment avenue that you take. So you do need money to invest in property, but there are avenues that need less upfront costs. So if you want to build a property business like deal sourcing, for example, that can be really good. But you want to be focusing on property strategies that are simple when you're growing your property investments and make it as hassle-free for you. Think hands-free, think boring, vanilla, buy-to-let properties. I hope this has been helpful. I look forward to having a chat for those that are serious in scaling their property portfolio by putting portfolio in the comments. And if you did get value from this video, hit like, subscribe, leave me a comment if you've got any questions, but otherwise I'll see you in the next video.